Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show.
Glad to be here, Jim. Thank you.
Mark, do we have a special offer for our listeners?
We do. Let's do for new subscribers the 50% off. And you go to VRTrader.com and you use the promo code 2022 half off. So, and as you get to the newsletter, you got a bunch of choices up there, but it's only for new subscribers, but it's for any time frame you select. But thank you for mentioning.
Mark, you have a variety of newsletters, don't you?
Well, we sort of picked active markets over the years. A gold letter, we call it the metal resource letter, and cannabis got hot in 2014, and we added cannabis to it. And of course, I have my book up there as well. And then, of course, crypto came into the picture, and we added what we call the blockchain letter. Then we got our market timing letter up there, which just gives the market timing signals for all kinds of markets. Could be gold or just the S&P or the total stock market index. So, yeah, we got a few up there. But the main letter is the VR Platinum letter. That's the one sort of covers everything. So I would encourage people to take a look at that. And also, I didn't mention I'm not a financial advisor, nor do I provide financial advice, but we do that newsletter now in its 45th year.
And, Mark, do you have a disclaimer?
Yeah, I'm not a financial advisor, nor do I provide financial advice. Thank you.
Mark, we had that mini meltdown on the markets a few weeks ago. What's the situation now? Because we're hitting all-time highs again.
Right, and the Nikkei come back to its high point, but has recovered quite a bit. That was sort of the trigger for this whole thing when the carry trade sort of collapsed, when the Japanese, central bank raised interest rates, and that sort of messed up a lot of people who finance stocks both in Japan and the U.S. Borrowing money at zero rates, and when they upticked it, that's sort of. But I don't think it's over. I mean, as rates are up, and Japan could raise them again, and I don't know if the unwinding of the carry trade is finished by any stretch, so there could be some more surprises over there. The question is, will it affect as it did then? Again, here, sell-off in the U.S. market, it depends how much the carry trade is still being financed. I suppose it's quite a bit. It's been going on for decades. It's not something to do out there at all. But, rates going up there and supposedly going to be down-ticking here. It's just crazy what's going on in the world, in terms of what governments think is the right things to do. Basically, the lowering of rates here has been anticipated forever, but it's irrelevant because the Fed has been raising and keeping supply. They don't talk about M2 or M3 or the money supply or anything like that. The Fed's still been pumping money into the economy. If you look at a chart, I mean, it's not going straight up, but it hasn't come straight down either. So it's a bunch of double talk on the part of Jay Powell and the Fed. Oh, we're going to bring inflation down to 2%. That's going to solve the problem. Well, they have so many other tools out there, and if they really restricted credit and restricted that money supply, they can do what Paul Volcker, that is, did back in 1980, really caused a collapse. Remember what it was like back then. So, it's you're not getting the full story. What's really happening. History says sometimes when Fed raises rates, it raises for a reason because we're in a recession. We're not being talked about that. We just look at NVIDIA stock going up or the index is being manipulated higher. But restaurants are closing. We just heard that Macy's, the big department store chain, is going to close 150 outlets. The consumer's in trouble. Leading economic indicators been down for months. Industrial production index down. If you look at the Dow Transportation Average, which measures, obviously some goods being moved, that's been underperforming. So, we're living in a little bit of a mirage, Jim, about what's really going on out there. But, if you're a trader and you're a little dumb and you just hold stocks forever, you look like a genius because, S&P went to new high and NASDAQ, and even though it was manipulated by a handful of stocks that took it there, your retirement account looks good. Everything is good in the world, and none of these other factors really play into. But ultimately, reality hits. PE ratios, price ratios are way out of kilter, and eventually they're going to collapse. So a year out, it may not be tomorrow. It may not be the sell-off we get into September, October. We have the election variable this year, So, but you just got to be aware that a little bit is a mirage of what's really happening. You just have to deal with it day to day. This, as Jim Cramer on CNBC, my favorite network, I say that jokingly, said the bull market somewhere, and we try to find it. And that's really true. It's really something always moving. Some stocks, some groups. There's always a way to make money, and then you can always take the inverse position and buy an inverse ETF and make money on the downside. So there's always an opportunity out there so long as the free markets are trading.
What's going on with gold?
It's hanging over that 2,500 area. It looks a little toppy to me. I put a little hedge on actually for subscribers. A couple inverse indexes against our position as a little hedge. Not a big one, just in case we get a bit of a correction here. If stocks start to come down and we get a sell-off, as we saw when the Bitcoin collapsed a few weeks ago in that Mt. Gox story, stocks were under pressure at the same time. All markets tend to pull back. So if we do get a little setback here, gold has risk. It could easily drop $200-300 an ounce on a big correction. I'm not predicting it will happen, but we're in a time frame where there is some vulnerability here. So, and silver has been underperforming. Silver has been nowhere. Gold has been doing. Gold's gone up for different reasons because of the BRIC nations, because of China and Russia hoarding gold. Individuals doing the same. So, fear of, even though we're told that inflation may be cooling, the opposite is really true. Inflation is still very much with us. That's why government spending money. I mean, we talked about this off air, inflation caused by government spending. Ayn Rand had that big quote that I have at the top of my newsletter: inflation is not caused by the actions of private citizens, but by the government, by artificial expansion of the money supply required to support deficit spending. And said that no private embezzlers or bank robbers in history have ever plundered people's savings on a scale comparable to the plunder penetrated by the fiscal policies of statist governments. So it's the governments that are doing it, and it just doesn't seem to stop. No matter who's in power, or there's always a need, supposedly, whether social programs or the fear of war or the need to produce weapons. Of course, we have wars underway right now. So, unfortunately, inflation is part of it. So to answer your question about gold, that's one of the reasons why gold is important. Unfortunately, it has been manipulated by the government. GATA.org, GAT.org has been documenting this for decades, where they suppress the price of it intentionally. And there's a lot of shenanigans going on in the gold market, but it seems to have overcome a little of that recently. So we'll see how free that market really is. But I think it's freer when you have gold trading at higher prices in Shanghai than it is in London or New York. And, the accumulation is taking place by BRIC nations, including Russia and North Korea and China itself. So ultimately, the suppression game, which has been going on for the longest time, might be moving on.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, what's the story with crude?
I wish I knew. I don't have a fundamental reason for you. I know that the chart said, you had a bit of a correction. We try to rally up a little bit. Some seasonal tendencies involved. Summer driver season is behind us, but we still have, the petroleum supply has not been renewed by the U.S. government, has been drained. There were promises they were going to be replenishing the reserve. There could be some just manipulation in the markets. But the funny thing is companies like Exxon and some of the big oil companies, Chevron, they're doing well, making money, some of it record returns. So regardless of where crude oil itself is, the companies are still benefiting by it. And, the chart, we're just in this corrective phase back into the low 70s. And, we've been trading basically between the low 70s and the high 80s for quite a bit of time here. My personal prejudice is higher, but, there is a fundamental concern, if, Donald Trump gets in and we free up production of oil in North America, which has been held back. What's the result of that? Does it depress prices if more production is out there? That sort of makes sense. Maybe oil is anticipating that, production is really going to come on full board and there's going to be more oil around, which has been restricted somewhat. And maybe oil is not going to take off unless there's some extraneous event, in the Mideast or in other parts of the world where the supply is severely constrained. So I have no other explanation. I'm watching the charts. I'm holding some key oil stocks. I like the index. I particularly still like Occidental Petroleum because of Warren Buffett's involvement. But the earnings of some of these companies have been positive. So oil itself is not taking off, but companies are doing well. And, perhaps the introduction, the expansion of nuclear, could be a depressant on oil at some point in the future, solar and so forth. But, I'm still a bull. I still have much higher targets over time because there's so much demand for it besides just our pure energy needs, as we've discussed in the past, just production of goods and services, automobiles, big demand. Maybe just a function of the fact we're in a recession. The powers that be don't talk about this. So the industrial production is down, and leading economic indicators are telling you this, and transportation is pulling back, as I've mentioned earlier in the interview. That puts pressure on oil, less demand and need for oil. So that could be what it's about, just the recession creeping up on us here, and with no dramatic international conflict, that might be the best explanation.
China-U.S. relations, Canada and the U.S. putting 100% tariffs on Chinese electric cars. Is that going to cause some kind of trade war?
Well, I know Elon Musk probably wouldn't be too happy about that. Really depends on how much demand there is for the EVs. I mean, they seem to have perked up a little bit, but I still, the average person demand out there I'm reading is still thinking, as I have, hybrid sort of the way to go. Don't rely on the EV because of infrastructure reasons, waiting lines to get your car charged, the inability to go any great distances. I know some cheaper EVs are being produced in China, and there's talk about how they're super competitive to Musk and so forth, but he still's got the lion's share of the market, and he's got the quality product. So in time, it's like even when we talk about AI and NVIDIA and chips, ultimately, they got the control of the market right now, but that's going to change as competition comes in, and the same with the EV market and the cars. So I think it's just a question of, more production, and we have to wait and see if the demand's going to pick up. I'm not so certain about that. If the recession issue, and B, the inconvenience of owning only EV power. So I'm not so concerned about the tariffs and so forth right now. It's really it's a demand function, I think, and we'll see how how much that changes short term. It's still not that great. I'm sure at some point it's going to turn, but I think that's going to come when the distances on the EV, the mileage is extraordinarily expanded. Charging stations are easy and cheap to find. That type of variable, and that's still going to take a few years. Well, I've been fearful of it. If you live in Los Angeles, for example, and you get stuck in traffic and sometimes hours, I don't want to be in an EV.
And they have brownouts in California.
Right, you can't even charge.
Yeah.
Right. So this is that's my thinking. I mean, I know the Prius came out with the alternate, hybrid type engine where you had a gas engine charging the EV component years back. That's an old technology already, but at least you had a backup. You know what I mean? So I haven't rushed out and bought a Tesla, that's for sure. I know others that have, but it doesn't fit my lifestyle, and I'm a bit paranoid about having to travel and not having the fuel to get there.
What's the outlook for uranium right now?
Uranium's been in a downtrend. The actual spot price of uranium for the last few months has been, slowly trending down. So I can't explain it other than reporting that the market's been down. Demand, the uranium prices, even the big uranium stock, Cameco, CCJ, based in Canada, had big correction, bounced a little, but still well off its highs. So we've talked about this before. Where has the demand come from that even propelled uranium up to that $100 level, and now has seen it back off? We know one uranium nuclear plant just opened in Georgia here in the U.S. That's the first in decades, and we don't hear or see a lot of other plants opening. So the real question is, where was the demand that drove uranium up there? Is it the space programs? Is it military? I haven't been able to answer that question because we definitely had a run on it. It's not like EVs where we needed lithium, for the cars. We're not running the cars on uranium. So just a big question. It must be military or government stockpiling or something that drove it up there. Well, one day we're going to read that, tons of new nuclear plants are going to be opening, and that certainly would be a demand. Now, perhaps some of the demand for the uranium was some offshore, and I know we were supplying Russia uranium for quite some time, but I think that was cut off or stopped, if I'm not mistaken. So, interesting question, but it is in a correction and hasn't quite turned yet.
What's going on with cryptocurrencies?
Just chugging along, tracking sideways after the big run up and then the big implosion, which occurred just a few weeks ago. Just like we had the Japanese carry trade implosion. So we had just before that, as you know, we had the big implosion tied to the Mt. Gox bankruptcy situation from decades ago, and their need to return lost investments to those who lost on the collapse of the Mt. Gox platform way back. And for some reason, I can't explain the technical details for it, but that shook the market enough to take Bitcoin from 72,000 down to the mid-40s. And though we've traded up since then, we've just been, sort of trading sideways. So it could still be the Mt. Gox influence. It only affects Bitcoin, but psychologically it was affecting the other cryptos as well. So that's pretty much it. I'm still a bull over time, but we run these 2-3 year patterns, at least in the markets that I've been following in the crypto area, and you sit for a long period of time, and then you take off again. So we may have had the run for a while, and it might be another year or so, and before it explodes. But if it ever gets that, referring to Bitcoin, if it ever gets to that 73,000, then it's probably going to be into the high 80s, low 90s pretty fast. You got to remember, at least in the case of Bitcoin, Larry Fink and BlackRock are one of the big triggers for the big runs here we've had in the past year. When that ETF got created and was approved, and the ability for individuals to buy an ETF versus the actual Bitcoin, put a big fire under the crypto market, and really that's why Bitcoin exploded and got up to 73,000 twice. Actually, they went there twice on a double top. But big money like that supported the creation of an ETF and many others. And there's rumors that you're going to see another one come out for Ethereum. And so I know Gary Gensler over at the SEC has been against, crypto ETFs, but he lost the fight there. And XRP, which is owned by Ripple, won a couple key lawsuits against the federal government. And everybody loves XRP as a alternate crypto, which, by the way, only trades around 60 cents. So, we're just, as anything else, and it's a cycle. The Mt. Gox thing might be affecting it. Could be, just a recession in the economy out there. Speculation, perhaps, for cryptos has hit a peak for a while. But fundamentally, the big numbers, the big people are behind it. So it's just a matter of whether you're a trader or investor. So we have core positions in both. And I just, it just depends on how strong your stomach is for the volatility in the Bitcoin market. But again, with BlackRock behind it and the government's losing, critical court cases, the big picture trend's up.
Anything happening on the geocosmic front?
It's been pretty quiet. We do have a lunar cycle ahead. We actually, obviously we talk about this a lot and people don't get excited about it as I do, but we have a new moon on September 2nd. So that's coming up right after U.S. Labor Day, and the markets are sort of hanging up here. So maybe it'll be coincident with this little rally that we had topping out. Come, third week of September, we've got the equinox, the fall equinox. And, I subscribe to the theory that around the seasons, mid-June, mid-December, third week of September, and so forth, you often see change of directions in the marketplace. March in particular on the vernal equinox is always showing interesting stuff. So, key cycles, are at play here. And, it would make a lot of sense to me if, we had a big sell-off right into the fall, the September cycle here. So we'll see if that works out. It's actually on September. It's the autumnal equinox, September 22nd to 23rd. And, history says September is the worst market of the year. So that would make a lot of sense to me if that happened. As far as the CMEs and solar activity, there has been some, but nothing spectacular. So I don't think the Carrington event is coming so fast, Jim. So that's all I see right now in the cycle picture, watching the lunar cycle next week and the autumnal equinox the third week of September.
Mark, thank you so much for chatting with us.
My pleasure.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.